Hello, this is Rochelle Agatha, and this is the lecture for the accounting cycle continued. So the accounting cycle is covered over a couple different chapters. The learning objectives in this chapter are to cover adjustments, things like prepaid rent, office supplies, depreciation, preparing an adjusted trial balance, preparing an income statement and balance sheet of the after the worksheet, and then prepare financial statements. So stepping back, where you've come today to this point is doing basic entries in the general ledger. Now what happens at the end of a month is a lot of things are recorded off of whether cash is paid or cash is received. And as you recall, we use accrual accounting. So with accrual accounting comes the need for adjustments. Adjustments, as I mentioned, are going to go over a couple different areas. This is a nice little slide. A business transaction happens, you make an entry in the book of original entry and you post it, and then you get a trial balance. From that trial balance, you come down and there's a worksheet. And in that worksheet, you're going to be doing adjustments, an adjusted trial balance, an income statement, and a balance sheet. The worksheet is really a cool tool to help you see where things flow. So you've heard me say it, and I'll say it again. We learn accounting in a very manual way so that accountants are real accountants and not just data entry people or bookkeepers. After you do the worksheet, then you create the formal statements. But the worksheet is a place for you to see exactly that everything balances before going to the effort of making real financial statements. Okay, here's what the book says about a worksheet. It's used to organize and check data, find and correct errors. It's kind of like a piece of scrap paper, and it contains columns. This is definitely something you can do in Excel. In the olden days, we used to do it on paper, but now we have Excel, which accountants love. So here's your trial balance. As you can see, it's in the trial balance order. Then you have your adjustment columns. Then you get an adjusted trial balance, and then you start your financial statement columns. Adjusting entries are for internal transactions. They bring accounts up to date, and it's where you recognize revenue and expense in the proper accounting period. Things that typically need adjusting are office supplies, items you pay in advance. So think about even for your personal self. You tend to have to pay insurance for a year, things like that. So prepaid items in companies are rent, advertising, insurance. Depreciation is considered an adjustment, and expenses such as salaries and rent. So most companies pay their employees on a weekly, bi-weekly, semi-monthly basis. So at the end of a month, you might have this adjustment for salaries. So let's talk about how to analyze and adjust an account. Here's an office supplies account. You purchase $600 worth of supplies during the month. At the end of the month, you take an inventory and you only have $100. Therefore, you have $500 of supplies that you used. Those are the expenses, the used supplies. So here was your first entry, office supplies, $600, and then you had what you used is expense and brings the supply account down. Remember, this office supply account is an asset, and the way I know that is because my numbering sequence is way down here in the ones, whereas my office supplies are up here in the fives. Prepaid rent is another typical account you have to analyze. You pay 3 months in advance, so that let's say that was $1,200. 1 month's only $400, so at the end of 1 month you used $400. So that rent becomes an expense. Take it out of prepaid, put it in rent expense. Other types of things, word processing equipment is expected to help produce revenue, so the equipment is allocated over its useful life. So here you show the typical depreciation expense entry is your cost less your residual value divided by your estimated years, gives you a depreciation per year. And then you can divide that actually down to months by taking the amount per year and dividing it by 12 and getting 80 per month. So that's your depreciation expense. So stepping back, big picture, you buy a piece of equipment. GAAP says you have to depreciate it over its useful life. For instance, this equipment is deemed to have a useful life of 5 years, so that's what you're depreciating it over. So here's a nice slide on keeping track of depreciation. Depreciation runs itself through an accumulated depreciation account. Accumulated depreciation is a contra asset account. It sits on the asset side of the accounting equation, but it has a negative or contra balance. Because what's happening when you buy an asset and you depreciate it over life, it's bringing its net amount down. Salaries, here's a salary accrual example where you pay for salaries, but then at the end of a period you need to accrue because something hasn't been paid. So if you pay your people biweekly or so every 2 weeks, 1 week pay period might cross over the end of a month, so you need to accrue at the end of that month. Once you get all done, you put all your adjustments in your adjustment column. You can tell they balance, which is really important. Accountants that go and make entries and they don't test it back against the trial balance first by making sure that it balances, you can put yourself in trouble. Preparing the adjusted trial balance columns afterwards is just to get a summary to make sure that your debits and credits equal and that you can move forward to do your financial statements. So here you go, you just drag the information across. You have your beginning debits, your adjusting debits, gives you your ending debits. Now down the road in more advanced accounting, you're going to find that there's adjustments that might hit both sides of the account. You would drag the total or net of the adjustment to the normal balance column in the adjusted trial balance column. Notice here they give you a little example. A debit minus the credit is the difference. So if you have a debit balance with a credit adjustment, notice this here, it's the net of the two. This is where if you're not firm on that accounting equation and the normal balance, you need to be so. So you need to go back and watch those lectures and really understand it, because at this point you're pulling a net total over to the adjusted trial balance. Then you prepare the income statement and the balance sheet. So they kind of ripped the paper here so you could see that all you're doing at this point is you will pull over to the income statement the accounts that go on the income statement. So this is a really nice visual. The income statement is revenues and expenses. So all we pulled over was the revenues and the expenses. And then the debts and the assets stay on the balance sheet. Notice here, how come the debits and credits don't equal each other here? I'll stop a minute while you think about that. The difference here is the net income, because this is your income statement columns only. So the debits and credits less each other is either net income or net loss. So at the bottom, they will balance once you add in or apply the net income. You'll see the word income summary in some instances, which is the accumulation account for net income. The income column greater than the expense column means that it's income. If it's less, then it's a loss. Let me move through here. So notice here they give you a picture. If it was a loss, then you would see it on the credit column. Preparing the financial statements from the worksheet. This is to ensure accuracy of the figures. We double check that everything is in the appropriate column, that the debits equal the credits, and that the columns are added correctly. When preparing your income statement, it's important to remember the following: that every figure on the formal income statement is on the worksheet. No debit or credit columns appear on the formal statement. It's just numbers. It's like reading, it's like looking at the index versus the actual story. The inside column of the financial statements is used for subtotaling, and withdrawals do not go on the income statement. They go on the statement of owner's equity. Preparing the statement of owner's equity. Now you need to check and verify if additional investments were made. Check the capital account to determine if the amount's correct. Note how net income and withdrawals aid in calculating the net figure. When you prepare the balance sheet, these are things you need to remember. That the totals on the worksheet do not match. Remember that the totals on the worksheet do not match the totals on the balance sheet. Information is grouped differently on the formal statement. So I think this is the hardest for some students to understand. The accumulated depreciation is subtracted from equipment, which I mentioned earlier, giving you a net asset number, and withdrawals are subtracted from owner's equity. So there's a summary of the chapter on this slide, and what I really think you should do before you start the homework is go back to the chapter and look at the examples of the worksheet and how the numbers flow through to the formal financial statements, because that'll give you a visual before you actually prepare any statements and help you understand by following the numbers through. Once again, here's some more summary, and you guys can watch these slides as many times as you want. I know you know how to read, so that's why I don't always read every slide. I try to keep these lectures within a certain time frame so they're not too overwhelming. And let me get to the end. When is the worksheet prepared? It's prepared before you're going to do a financial statement. So right now we're doing monthly things. We talk about everything in a month. But if you were going to do quarterlies, you might have a worksheet that's capturing a quarterly. But for the most part, the worksheet is prepared for a month. If you have any questions, go ahead and send me an email. And like I said, please go through the examples in your chapter and make sure you understand how the numbers are flowing off that worksheet before you begin. Thanks.